You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again. It is Education Wednesday. It is time once again to hold court. A little bit of the old options education is time once again for Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are binging. Remember, first and foremost, if you're just listening to Bootcamp, you just subscribe to Bootcamp, you're missing out on so much. So much, literally a couple of shows a day coming at you, listeners. So make sure wherever you're listening to this, if you like it, like and subscribe, and of course, review it. It does help all the new folks coming off the hottest month in the history of the network, listeners. So something is working out there. We want to thank all of you out there. Take the time to rate and review. Of course, also subscribe to the full network. And if you want to go above and beyond, you need more in your ear holes. And who can blame you? We have a lot of good stuff floating around out there. You want to get exclusive content, pro Q&A sessions, options oddities, giveaways. We just gave away our June Pro Trading Crates. It was a fun one. Those are all amazing one-off, very bespoke items. You want to get your hat, your name in the hat for that drawing and everything else that we do. Theoptionsinsider.com/pro also gives you live access to everything we do here on the network. And you know, listeners, I'm still here in the Southern studio. And I was feeling a lot better. I thought I was put all this nonsense behind me. And what they say in The Godfather, just when I think them out, they pull me back in. I'm still back a little under the weather again today, which is not ideal. Luckily, we have the most loquacious man on the planet joining me today to help fill a lot of time. We have the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, a.k.a. Mr. Dan, welcome back to Options Bootcamp, sir.
Hello, Mr. Longo. It's great to be back. One thing in the week that I look forward to every darn week, and we've got lots of good stuff to talk about today here, don't we?
I think we do, so let's get to it. A little bit of the old basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right, very festive. The chat's saying they can't hear you, Dan, so I think that should be fixed now. So when we get Dan back, you should be able to hear all of his goodness, all of his pearls of wisdom out there. And this week's basic training, listeners, kind of inspired by a lot of the questions you guys have sent in. And we have pontificated on at length here on the show. A lot of you have been writing in with questions along the lines of, hey, man, where should I be buying back in now? What are some good levels? Where should I sell puts? We have fielded many questions along those lines over the past couple of months. Understandably so. These are crazy times, crazy markets, and it's understandable that you would have questions. That is what we are here for. But Mr. Dan, last week on the show, when discussing one of those levels to sell puts, and I mentioned the notion that we don't really talk about here a lot because the show is called Options Bootcamp. It's not called Cash Camp, but the notion of cash in and of itself being a position in these troubled times, sir. Mr. Dan, I know this really resonated with you last week, and you kind of wanted to dive a little deeper into it. What are your thoughts on the madness of cash right now, sir?
So this is a really interesting topic to talk about. And so, I mean, there's a lot to unfold here. Let's just kind of start out a little bit with the traditional approach to cash. And, from an investor standpoint, you know me, I always make the big distinction between trader and investor. Very important distinction. With investors, basically you can buy stocks, you can buy bonds, or you can put your money in cash, right? That's a gross oversimplification, but that's basically it. And in times when you feel more risk, you put more money in cash. And that's something that, they used to teach in high school macroeconomics, but they don't want American children to understand economics these days, apparently, because they don't anymore, at least not in a thorough way. But, that is a real basic fundamental that everybody should know, and I think most people do. But then when it comes to trading, very different game, and that's not taught in school because it's a very specialized thing that folks like our listeners want to know more about. And so with that, we keep money in cash until we spot opportunities, and we've got a limited amount of cash. And so we should always have some cash reserves and try not to max out our account, which is hard to do with smaller accounts. It's easier to do with bigger accounts. But when the market is less conducive for trading, and I could go off a little bit on a tangent on that here, and if you don't mind, I think I will in just a second.
Have at it, sir.
All right. When the market is less conducive for trading, not investing, but trading options, then that's when people would sort of move from this investment that is your trading business to cash, right? Or at least move a higher percentage from this investment that is your trading business to cash. And so, first of all, I think that's a really great way to look at it, because that, when you're trading, that is kind of what you're investing in, is this business of trading, because that's literally what it is. But now let's talk about that less conducive bit. If we go back to the investor thing, if you think the market's going to go down, then it's less conducive to be long the market. But when it comes to option trading, if you think the market's going to go down, then you put on delta trades, whether that's buying puts or whether that's, selling call credit spreads or put debit spreads, a host of, other potential things. So the question then becomes, is the market less conducive just because it's not going straight up? And I would argue that the answer is no, that it's not less conducive. And in some ways, sometimes it can be more conducive in down markets or in markets that are, like we've been doing here for the past 5 weeks, sort of oscillating. So this is based on that just really basic principle of when to invest in the asset of cash. For that reason, I don't know if cash is a better investment, because I'm not convinced that the market is less conducive to being an option trader right now. It's a little harder if the only thing you know how to do is sell put spreads or sell puts, like some people did, for 10 years between 2010 and 2020 and thought they were geniuses, right? And that's the only thing you know how to do, then sure, it's not conducive, but that's not the market's fault, that's your fault, right? So let me pause there, give you a chance to share some thoughts, Mark, but then I want to get into not just the fundamentals of cash as an asset, but how that looks right now in inflationary times.
Yeah, listeners, if you are part of our pro offering, you should go back a few weeks. We had a great pro Q&A with, I believe it was John Brady from RJO, who spent a lot of time in the hot seat really extolling the virtues of cash right now. So if you're on the pro side and you missed that one, I encourage you to go back and listen to his thoughts on cash as a position right now. So he must have some spooky thoughts too, so beware. If you're a hardcore bull, he may scare you a bit. But he was very interested in the notion of accumulating cash as a position right now. And of course, if you're not a member of theoptionsinsider.com/pro, that gets you access to everything. You also get the pro podcast feed, so you can go back and check out all those pro Q&As that you missed. And we just did number 60 this week. So there's quite a few of them out there for you guys to check out. But Dan, you touched on the thing that we know the second this show goes live and people see it in the headlines, something with a cash in it. You know, the instant this goes live, people are going to push back and be like, oh, but inflation's 9.1%, Dan. So cash has a huge opportunity cost. It's a losing position. Why would I ever go to cash? Like how I can encapsulate the voices of our listeners so well. Even under the weather, I can still be a good impressionist. But what do you have to say for those folks who are freaked out by 9.1% inflation eroding their cash?
Yeah, and their voices really do sound exactly like that. So yeah, that's a very good impression.
It's amazing how precise I am.
So here's what I would say. First of all, just like all other businesses, each individual business is run differently, right? Like even if you're in the same business, McDonald's and Burger King and Wendy's all have somewhat different approaches, right? And so the way you trade is going to be different than the way someone else trades, is going to be different than the way someone else trades. And notwithstanding what I said before, that like if you have a hard time trading in this market, maybe you haven't yet learned the things you need to know in order to expand your business so that it can flourish in this sort of a market. But if you're not there yet, and the way your business functions is, hey, I just sell put spreads when the market's going up, then cash might be something to consider. Now, like Mark said in his very accurate impersonation of our listeners, there is that question out there, and it's, if I hold my money in cash, do I lose 9% over the next year? And that is a valid question. And there's kind of a lot to unpack there. And the answer is yes, but also the answer is no. Because not every single asset has gone up by exactly 9.1% or whatever it was last week, right? Gasoline was one of the real leaders. The price of gas has gone up a great deal more than the price of everything else. Now, I would say that, and I'm not looking right now at extremely detailed minutia data on this, but generally speaking, across the board, the price of everything has gone up somewhat. But, if you live in a city and you just take the public transportation every day, you probably feel it less than somebody who drives an hour and 15 minutes each way back and forth to work or school or whatever, right? So if you hold money in cash or you're really losing 9%, I don't know, you're losing something, okay? And it all kind of goes from this point forward. And so that depends on what inflation plays out to be while you're holding your money in cash, okay? So to that degree, the answer is yes, you do lose money holding it in cash, or at least you lose buying power. That said, if the only way you run your business is selling puts, you might risk losing more than 9.1% by using that strategy over the next 3 months. If you've been using that strategy since, since the beginning of the year, it probably didn't go super well for you. There are very few periods where that might have worked out, like maybe March. And so holding your money in cash and losing some buying power, whatever that is, sort of for your personal situation, I guess I'll say. Is that 5%? Is that 12%? Depending on the things that you buy, depending on a lot of things. Maybe losing that buying power is better than selling puts. And so, that brings us to, and this is the reason why I do the show, and this is the reason why Mark does that show, is maybe investing in your education, like investing in your business more, right? Like any business that starts, and I don't know, I could come up with any example. Well, we'll take like Coca-Cola, right? That's been around for how long? 200 years or something like that. Maybe not quite that long. Over 100, I think, though. They started with a soft drink that had cocaine in it, and they had to kind of change that. But then, they find that, hey, maybe cherry Coke works. Let's try add this other component to our business. And then root beer. And then now, I don't know, I'm sure I think they sell like snacks and stuff. They have other divisions. They invested in different areas of their business so that they could profit from more sectors of the similar market, right? And so if you feel like your two choices are, I can keep trading, or I don't think it's going to work, so I'm going to put my money in the asset of cash, your third choice is to expand your business and invest in that education, invest in the knowledge that it takes to trade something different that you know how to do already, but isn't conducive to this market. Think of it as a different product line, right? Think of, getting good at time spreads. Not that necessarily right now time spreads are universally great or anything. There are some good opportunities. Getting good at trading earnings, for example. Getting good at lots of, something else that might be more conducive for this market. Expand that business.
Leave it to Dan to bring up the cocaine-laced sodas, sir. I could probably use one of those right now just to boost my energy level. I'm kind of dragging here. But instead of going that route, listeners, and going the illegal route instead, let's keep on rolling. I know you guys probably have questions about cash and utilization of it, so if you have them, hit us up. Let us know. We can get more into cash. We kind of wanted to just set the table for this week. This is a conversation we're probably going to come back to because, of course, we are in this 9+% inflation environment, and people have cash on the brain. At the end of the day, losing 9% over the year is still better than losing, what were we down 20-odd% in the major indices? Obviously, we're rallying a little bit now, so some of that getting wiped away again. But overall, it's been better to be in cash, obviously, than to take the drubbing. In fact, speaking of which, I think let's get to some of your feedback right now because you guys have thoughts along those same lines. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Very festive. Flag Day. 4th of July. We were in the Disney parks yesterday, listeners. We saw a guy dressed up like Uncle Sam. Just a person visiting the park. So hopefully he's listening out there right now, Uncle Sam. If I had a cap, I would tip it to you. That was a great costume. All right, let's go on out now to what you folks have on the brain. First off, last week, let's pay off last week's poll. And we asked you last week, it's time to spread your options trading. Wings, in particular, which spread with wings is finding its way into your trading arsenal right now. I gave you 3 choices and the proverbial other: Iron Condor, Iron Butterfly, Traditional Butterfly, or other. And Mr. Dan, 43.8% of our crazies chose the Iron Condor. So Iron Condor making a comeback. I thought Butterfly would take it, but Butterfly fought a valiant fight. But at the end of the day, it went out with 37.5%. Ironfly only 12.5%, and 6.3% for other Mr. P. Does that surprise you that the Iron Condor trumped the Traditional Butterfly, sir?
No, I mean, I know, in some ways, the Iron Condor, had such a big run back in the early to mid to, well, probably all the knots, right?
Yeah, it
So
seemed like it was a decade ago when iron condors are really flying high.
Yeah. So like in that regard, like, it's easy to think it's old school, but they do have that advantage of having a wider break evens than a butterfly. And granted, that's not like the be all end all. Like there's several advantages that butterflies have over iron condors, but I don't know, like maybe especially in a market like this where you kind of feel like you need a little bit more wiggle room. I can see it. I can see it. I can see iron condors beating those other wing spreads.
Yeah. You guys are Iron Condor fans? We have Options Queen in our live chat saying she picked Butterfly. Well, clearly you were not enough, Options Queen. We needed a few more % of you to do it. Oh, Mr. Unlimited said the same thing. Yeah, I kind of thought Butterfly was going to run away with it just from engaging with you folks all the time, seeing your feedback, your questions. I can count on one hand the number of times you guys have asked us about Iron Condors over the past few months. So I didn't think it would be that resonant, but alas, Iron Condors taking it out. Intriguing stuff. Maybe they're due for a renaissance, the renaissance of Iron Condors. This week, our question of the week, this kind of gets back to what we were talking about earlier, Dan, with levels and cash and everything. We said we've seen a nice pop in equities and crypto over the past week. Are you buying back in at these levels, or is there still more blood to come? Gave you 4 choices this time, saying you're buying equities here, you're buying crypto here, you're buying both here, or there's more blood coming. Mr. Dan, sir, what is your vote? And what do you think our audience is voting for?
Well, I know I can start with my vote, or at least my thought, my musing. I, like you guys who are long-term listeners, you know that like long ago, not too long ago, when like around the time when Bitcoin first made it to $20,000, I was pretty heavily into trading crypto, and then kind of lost interest when everybody lost interest, and then and did okay, as I recall, and then got back in at really not an ideal time. So I'm still down quite a bit on my very small crypto dabbling.
Did you buy Bitcoin at 60,000 again, sir? We've talked about this.
No, I did not. I've shied away from Bitcoin because I do have some good thoughts on crypto, and just to give the Cliffs Notes for those who remember what Cliffs Notes are. I look at crypto not as a currency anymore. I look at crypto as an asset, or each one as sort of a company that has an asset, basically for smart contracts and web, building out Web3. So I believe strongly that crypto is going to have another renaissance, but I just, you get kicked in the nuts so many times, like you just kind of have to sit there and, well, I'm not going to say lick your wounds because that would be a weird mixed metaphor. But, like I'm going to kind of wait this out and not try and buy the bottom. I wouldn't be surprised if the bottom is pretty close or already happened, but I'm just going to, for me, I'm going to hold off. I am going to say that our audience, however, says, I'm going to say it'd be the top 2 answers, and I don't know which is the top, is either I'm buying crypto here or there's more blood coming.
So your personal vote is there's more blood coming, and you think the audience is there or buying crypto. Okay, well, in terms of the blood, 50% exactly right now saying there's more blood coming. Then we have a tie for second between I'm buying equities here at 17.6%, as well as I'm buying both here, 17.6%. And once again, the laggard, pure crypto, only 14.7%. Again, this has a couple of days left, listeners. So if you're listening after the fact on the podcast, then you'll have time to go vote. At Options is the place to go to make your voice heard. A lot of people have opinions on this, as you might expect from this topic. We have Daniel Hoban. He says, I'm buying here, and there is more blood coming. So he wanted a 5th option. which is I'm buying more, but also I think there's more downside to come. Just a regular Joe, aka Marine Recon, he also wanted a fifth option. His is less family friendly. He says, I never blanking sold. That makes me sad, Marine Recon. You know, we have a show like this where one of the things this show exists for is to kind of help you guys ride the elevator up and then hopefully get off it, or at least cushion your landing. And if you're just riding it up and riding back down, there's a lot you could do in between there, listen, not the least of which what we talked about today, going to cash. So yeah, that makes me sad, Marine Recon. But hey, you have a show like this, you have good people behind you here on the network, so we'll get you back into fighting shape. See what I did there, listeners? So yeah, by the way, our chat also commenting, they think it was Twitter bots voting up Iron Condors in our poll last week. That could be, you know, once Musk and his bots, he unleashed the bot army. Now they're just messing with everything on Twitter. Let's go out this one, Neil. This is from Neil. This is right up your alley, Dan. He says, do I need to care about Roe if I'm pretty much just trading weekly options? Love the show. Thank you, Neil. Yeah, we didn't have a chance. I think I was just too under the weather to go pull a 5-star review. Thank you for everyone who took the time to rate and review the show this week. Neil wants to know, do I need to care about Roe if I'm pretty much just trading weekly options? Well, of course, the short answer is no. The long answer is, of course, you should be familiar with and understand all of the Greeks because they can impact you at the end of the day. Sounds like for your position, Mr. Neil, Roe is not really going to be a big factor unless you change your trading style. Mr. Dan, what do you have to say for Neil who wants to know, should he care about Roe if he's just trading weeklies?
Yeah, you know, think about it like, hey, if I have $100,000 and I'm only going to put it in the bank for 3 days, should I really go and have a 3-hour negotiation with the president of the bank about the interest rate? No, probably not. It's a little bit of a waste of time. And so your options are going to be barely affected by Roe. So, you know, by the time they raise interest rates, you'll be out of the ones you have on, and then after they raise interest rates, you'll be out of those in a few days. So I wouldn't worry about it.
Now, Dan, if you go armed to that meeting with the bank supervisor with some of that cocaine-laced soda you were talking about earlier, then maybe you come away with a pretty decent rate. Let's go out to Dacyborg, maybe Decyborg. Let's go with Decyborg because why not? It sounds cooler. Decyborg wants to know, what's the deal with nanos? Is anybody trading them? Where can I access them? What products have nanos listing on them? And so let me go in order here really quickly. Not much. Really no. A couple places and only one product so far. That's a short, obviously, answer. By the way, excuse me, Decyborg and everybody else who's interested in the nanos, we just had Mr. Nano himself, a.k.a. the Flow Master, a.k.a. Henry Schwartz from Trade Alert, on our Pro Q&A yesterday. He did answer some questions about nanos. He is kind of the guy who is responsible for creating them. So he was the guy to ask. And he gave us an update on nanos. And he said, quite simply, to answer your questions in order, what's the deal with them? You know, they exist. They are out there. They're not exactly lighting the world on fire. You asked, is anybody trading with them? Henry has been kind of the lone guy trading them for a long time. He was very excited on Tuesday's show when someone traded a 750 lot. I remember that's 1-to-1, no multipliers. So that's 750 shares of the S&P there. So a little bit different. You're talking like a 7 lot of your traditional 7.5 lot of your traditional 100 multiplier contracts. So it's not big paper, but for the nanos, it's something. So a couple of people are trading them outside of Henry, not many though. Where can you access them? Henry just mentioned that Fidelity just added them, as well as I believe IB was one of the early adopters of that. So IB and Fidelity seem like the two. Oh, he mentioned Webull as well, which makes sense. That goes hand in hand with that fractional share audience. And what products have nanos listed on them? Right now, it's just SPX, and you could guess why. It's a SIBO product. SIBO owns SPX. They want to promote SPX. They want to get you trading SPX. So they have a vested interest in putting a proprietary product on one they already own versus, let's say, a Tesla or a Google or an Apple along those lines, which I'd imagine might resonate more with a lot of the listeners of this audience, but SIBO doesn't have the same skin in that game that they do with SPX. So right now, it's pretty much just SPX, and it doesn't sound like that's going to be changing anytime soon. Mr. Dan, anything to add on nanos for Decyborg?
Yeah, I mean, I think it's conceptually a great product. It's just, I think the SIBO needs to work out, do some negotiating or what have you with the brokers. It's kind of like, if like the thing about marketing is they used to say when we were kids, I guess they still say it, like, I've got a great business. I build a better mousetrap, right? But, you could build the best mousetrap in the world, but if no stores are going to sell your mousetrap, you're not going to make any money, So I think the SIBO has some work cut out for them, and they have to go and convince the brokerage firms why they should be offering them to their customers, because that's the only way it's going to take off. If you trade through whoever, Thinkorswim, and you can't trade nanos on your Thinkorswim platform, you ain't trading nanos. So that's what I'd love to see happen. I'd love to see some brokers list them, because I think they make a lot of sense. I think they democratize options more. They just make it a better product. Options benefit people, and I think it will benefit many more people if a regular person can trade them, which you can't with some of these higher valued stocks that haven't split yet.
Let's get out here. There's another good handle, Options Outlaw. Are you hiding from the authorities when you write to us? Options Outlaw. I like that handle. This question, maybe not so much. He wants to know, how many options trades should I realistically make in a week? There's no 6, 27. There's no hard and fast rule. I mean, you don't tell us anything about what kind of trading you like, what style, what duration, what names, how big your account is. These are all, what level of education you have. These are all very, very important considerations before you start blurting out a number. 6. There you go. If you don't do 6 a week, you're not doing it right. This is kind of an impossible question to answer. Dan, I'm sure you've gotten a variation on this in the past. We have to say for Options Outlaw, who's hiding out from the law and wants to know how many trades you should be making.
All the good ones. You should make all the good ones. But, that said, like we have one-on-one coaching, and our mastermind, which are two things where we work very, very closely with people and we get to see their accounts and what they've been trading, and offer our thoughts on it. And it is an occasion where I'll be working with a one-on-one coaching student, or even sometimes somebody in one of our masterminds, where they have on like 80 trades, and I'm like, how can you do that? Like, how can you manage those trades? Like, if something's going against you, if it reaches your pain threshold, like you have to get out. There's too many to monitor. I couldn't possibly do that. Even if you have resting GTC limit orders and stop orders and such, I mean, I couldn't possibly do that. So like, it does get to a point where it's too many. And then, in smaller accounts too, like, I mean, do you want to have 12 one lots on? Maybe not. So, you kind of have to find that sweet spot. I think even when you're first starting out, more than one is a good answer, because I think psychologically, especially before you've logged a lot of wins and losses and have your psychology in your head right, if you just have one trade on, it's very, very easy to put all your emotional eggs in that one basket. So the best answer is somewhere more than one is ideal, but not too many that you just couldn't possibly manage the trade.
Yeah, over trading is definitely a thing we've seen many times from a lot of our newer listeners. They send us a list of, here's my 60 trades or whatever I've done. What should I do with these? And you look at it, you're like, what a random hodgepodge of things you have on there. You're right, Dan. So definitely, you could definitely overtrade. So I think I would definitely steer away from that. Who was that? Options Outlaw. And yeah, more than one is kind of good. It does diversify your attention. But if you're, just getting started and you're worried or can't really manage these things, a one lot here or there is not going to kill you, and it gives you a little bit of a chance to have some skin in the game before you get to these, ridiculous levels of 80 plus positions, which again, we do not encourage, listeners. Let's get out of here on this one from BJD. He or she wants to know, I'm down quite a bit in SPY from the highs. Yeah, I think you and a lot of people there, BJD. Witness our commenter earlier in our poll. Who was that? Marine Recon. A lot of people have been riding it down. He or she continues here. How should I approach these levels now? Should I buy more to average down, sell puts at a lower level, or is it maybe, going back to what we were just talking about a few episodes back, Dan, is it stock repair time? I'm sure this is probably the number one question you're getting over there at Market Taker right now. What do you have to say for BJD? He's taking a bit of a hit in SPY. He wants to know if he should be averaging down, selling puts, or maybe stock repair times.
Yeah. So BJD, the Mark and I give a lot of thoughts and musings here, and most of those things come from just years of experience that we know are sort of what a lot of people would call best practices, just like logical, sound ideas for trading. But the one thing we can't do is see the darn future. Clearly you're looking at this, I think, from an investor standpoint, not really from a trader standpoint, right? One thing I would feel really confident in saying is that one day the market's going to head back up and recover. Might not be for a few months. So I think if you're sitting in a lot of cash, I love the idea of average pricing on down days when implied volatility is up by selling puts. But that's kind of picking your spots. Like that's one thing that I did reasonably well. Obviously could have done it better. You never always buy the bottom or sell the top. But during the pandemic, I happened to be in mostly cash at the top. And as it went down, I sold about 20% of my position in puts and got assigned. And then when it went a little lower, sold more puts and got assigned, sold more puts. I was totally reinvested before we hit the bottom, but ended up working out. So, this is clearly a different scenario. This is not this massive V-shaped thing or anything like that. But if you can afford to get assigned on some puts on stocks that you'd love to buy and hold at this level because you think it's depressed now and you think that a year from now the market could recover somewhat, I love that. And then the stock repair would be sort of a different scenario. That would be for stocks that you already own that you're down on. The one thing that I'm personally not doing is selling stocks at this level that I own. To me, I just don't think that makes sense for my long-term investing. So a stock repair strategy could be a good one there. And one thing I like about the stock repair strategy is that it's not one of these where you put it on with a weekly option and it just works out. Like the only way the math works out on the stock repair strategy is if it's like a 3 to 8 month position, which is probably a lot more conducive with some sort of market recovery. So that's not a bad thing to look into on a situational basis either. I love the way you're thinking. I love the questions you're answering.
All right. Well done, BJD. Everyone took the time to write in. We thank you all. We try to get to as many of you folks as we can here on the show, even though our cup runneth over every week. Before we go, Mr. Dan, if folks have more questions, they want to reach out to you, see what's cooking in the land of MTM, where should they go? What should they do?
We would love to hear from you. Make your way on over to markettaker.com, 2 T's in a row. And, you can join free. If you're a newer trader, we'd love to have you access some of our complimentary content. I don't like to call it free because it's I put a lot of work into it to make sure that it's good. And so that'll be really helpful for some new folks. And those of you who, we get a lot of questions from some clearly advanced people. If you think like a mastermind type scenario where you're trading in a small group live in person in Chicago at the Chicago Board Options Exchange with some of our top students, if you think that that's something that might make sense for you, you can always go to markettaker.com, hit contact us, and ask me about it. And I'd be happy to have our folks, or maybe I'll even give you a call myself and share what that's all about.
Just beware, Dan will call you at 2 a.m. because he's hopped up on those cocaine sodas. Can't get enough of those down there in Frankfurt. Markettaker.com. Don't forget the second T there, listeners, for Theta. And then you can check it all out for yourself. That's going to do it for Options Bootcamp for today. Don't worry, Education Wednesday not done. Going to have Brian coming up a little bit later today for OPR live to tape. So you will get that on the on-demand side, all you folks out there. And then back again tomorrow, provided I hold up for your double dose of TWIFO and the option block. Friday, volatility views, and for all you cool kids in the secret club, options oddities after that. Then back again next week with another great Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.